Welcome back here. Check out this big about face in today's session. We'll tell you which stock started the day in the red and ended with nearly a 10% gain. When we start off with a big old rally to end one wild week, all three major averages surging into the close to hand in their best performance this year. The real action was in technology, the Nasdaq jumping 3.1% for its first weekly gain in 5 weeks. Check out the moves in mega cap tech stocks. The Apple soaring nearly 7% on the back of its results. Microsoft, Alphabet, Amazon also seeing some strong gains. So is today's action a temporary bounce? Or is there a turnaround in tech land? We asked last night, did Apple just save the tech trade? Tim, kind of looks like it did.
Well, so did Microsoft this week, and so next week, obviously Google, Alphabet, and you have Amazon as well. And I think the question for mega cap tech is really, is mega cap tech going to save the semiconductors? So I would have made an argument really for most of the last year, and you could probably have made it for the last 3 years, that semiconductors were the most important chart in the market. If you look at a 5-year, some point, Monday, Tuesday this week, you really started to see that semiconductor stocks index, SMH, whatever you're tracking, break through the trend, the uptrend that it's had for really the better part of 3, if not 5 years. And again, underperforming not just the S&P, but underperforming the NASDAQ or the triple Qs significantly. And that's really what I think you need to watch, because yes, it was an exciting close to the day, but this was a week where I think we may have lost that leadership in semiconductors. It's not to say that it's gone forever, but I think with the volatility of the unknown in a rate environment that, again, this week we saw the dollar have a major move. We saw the short end of the curve have a major move. I'm worried that semis are going to be held hostage until we get a little bit more guidance from the Fed where they're going to be.
And we'll get Carter's take on semis for sure, Nadine. But at the same time, in terms of mega cap tech, if mega cap tech is the pillar of the markets, which it is, we had great news out of Apple. We had Microsoft, which sort of did a head fake on us in terms of the after hours, and then the next day, the digestion of the earnings, it turned positive, the view of the earnings report. And then Netflix, even though it laid an egg, we had Bill Ackman step into the stock, showing that people think that there can be value at certain levels. So it seems like these are all good news data points for the tech trade and for the broader markets.
No, I think you're right in that, number one, obviously we've had great earnings with some of the key leaders here. There's more to come next week, though, so the story isn't over. But secondarily, one of the reasons why tech doesn't do well in this certain type of macroeconomic setup is the growth of GDP is decelerating. And so one of my concerns is the best that we're going to see is this quarter in the earnings. And then are we still going to have, strong earnings from here, but maybe decelerating? And that's not going to be great for tech. And so while we still hold positions, we have lots of clients with low tax basis, we're hedging a lot of the tech upside here. We have to be a bit careful. So we're more buyers in gold. We picked up, obviously, when the Fed came out this week, very hawkish, some bond-like securities, and that could be treasuries themselves, or it could be utilities and staples. So we're trying to be a little bit more cautious. So I think today was a little bit more hedge the rip.
You also cautious, Bonaway?
I think you always have to proceed with caution, but I do think this underscores that outperformance in the overall market will largely be led by tech. Now that we said it again, that's really concentrated at this point because we've had a re-rating of those names, and those names do make significant cash flow today. Now, in terms of the outperformance of the Qs versus SMH, I think Carter will get into that a bit further, but that is the next pocket to watch there. But yeah, I think you always proceed with caution. But if you are bullish, I do think I don't think you got to throw the baby out with the bathwater. You got to own both, and if you want some outperformance, I do think that is going to come largely from large cap tech.
Yeah, some of the charts in today's market were fascinating, Steve, and Apple in particular. Apple finished on the absolute highs of the session. And I'm wondering if that makes you rethink the Apple story in terms of valuation, or rethink the tech trade story.
So I do love Apple, and I've never really rethought Apple. I think Apple is your growth, is your value play. But I think you hit it on the head with the interesting charts in the market today. There's a ton of outside days. An outside day is a higher high and a lower low from the previous day. Why is that important? Because it usually signifies a break in trend. We had an outside day for the triple Qs. We had an outside day for Microsoft. So Apple did save the day. Netflix killed the market. Apple's trying to put it back together. Why is Apple trying to put it back together? Because everyone was so worried about the supply chain. Now coming out of Apple, you're not worried about the supply chain. What does it do for inflation? Lowers your estimates for inflation going forward. That means that Powell maybe doesn't have to keep his foot on the gas quite as heavy as he would have a day or two ago, means tech can rally.
I mean, I think that's a good point about the supply chain, Tim. I mean, do you think that Apple has alleviated a lot of those concerns, whether it be about the supply chain and the resolution of those kinks in the system, or about the growth in China, which was also a concern because of its Omicron exposure?
I think I think Apple's actually been a place where they've been a lot more balanced on the impact of supply chain for them. In fact, it really wasn't until last quarter that we got some sense that they were vulnerable like others. But really, like what we've heard over the last, I'd say, couple weeks of earnings, and even what we started to hear on interim results from companies, is we are seeing some alleviating of supply chain dynamics. Look, I think if anything, it's going to be a real challenge to manage inventory for companies as we get into the next 3 to 6 months. And that's also part of the concern I think investors and analysts have in terms of multiples and margin compression. So yes, look, Apple is going to be the company that will take most of our cues from, but Apple was not the one that was screaming loudest in terms of supply chain. So it was a very strong report from Apple across a couple different sectors, but specifically on guidance. And I think that's really